We're back in studio this Monday where Frank Holmes joins us for a brand new Gold Game film. Frank, good to see you again.
It's good to see you.
All right, let's start with what happened on Friday. Gold tumbled 2% after a much better than expected jobs report, leaving investors to question when and if the Fed will raise rates. Frank, is Friday's price action in gold just evidence that the U.S. rate hikes have not been priced into the equation yet?
I don't think they have to raise. What happened was the CPI numbers fell, and that made the 5-year and the 10-year government bonds have one of the highest real rates of return, higher than all the other G20 countries. So the dollar is strong. It's been on a tear. And what's really impressive is that the dollar hit an 11-year high, but gold 11 years ago was $400 an ounce, and oil was $40 a barrel. So gold is actually doing spectacularly well in that context. I think what's important for investors is that the real rates of return are very strong. There's no reason to get the dollar any stronger by lifting rates higher, because it will truly hurt America's ability to export finished products.
All right, let's get to our opportunities and threats segment now, starting with ops. Despite rate hike concerns, some analysts over at HSBC are saying that a higher rate expectation may actually pressure equities and help turn gold. Do you agree, Frank?
Well, higher rates are a reflection of trying to slow down the economy. But the economy is so fragile that, and I believe, and I mean, this is my opinion, that if rates were to rise, that you could have a quick slowdown, in particular the mortgage market.
Also, on opportunities, Asian demand has been subdued for gold, but it may pick up in April due to the upcoming Indian festivities.
Yes, there's a big Indian festival that comes just around tax time, April the 15th. Their holiday is April the 21st. So there's usually a buildup between now and then of consumption of gold. So I think these are very favorable. There was no tax increase. There was no tax decrease in India, but the GDP is doing well. And that's what's important for the love trade. The GDP per capita is highly correlated to the rising GDP per capita of China and India. So we're seeing China and India doing much better. The other part about China, which is interesting, is that China, their infrastructure spending is impacting the GDP number at a macro level, but they're creating all these new technology jobs. There's been substantial growth in other industries, and that is also a positive part for consumption of gold, where they have a dollar cost program and they buy through the bank.
Still on the topic of threats, Frank, and weighing on gold are the investigations into alleged precious metals manipulation by the major banks. There was a report issued by the Wall Street Journal. Could this be a potential threat? Is this something that would shy away gold investors from the precious metal space?
No, I don't think so. I think that what will happen is what's been taking place now in Shanghai, created a tax-free zone to attract bullion dealers from around the world. And now we're seeing all the gold basically shifting in smaller bricks from Switzerland's refineries to China and then showing up through Shanghai. I think that China's going to become the price maker for the gold fix rather than the price taker. And I think so. All this other stuff will be noise. It'll be gone. What's important is the consumption of Perth gold mints. You see the record sales. You're seeing that more and more investors are still consuming gold coins, wafers, etc., at a very healthy pace.
All right, Frank, let's conclude this Monday with gold's touchdown pass for the week. What will it be?
Well, it's going to be industrial production coming out. Industrial production is highly correlated to industrial demand, which seems to have the highest correlation to commodity demand. So we'll see how it impacts copper, impacts iron, impacts oil. So I think that that's an important factor. And what's important to remember is that global PMIs have turned positive. China's PMI is above the 50 mark. And going into the second month now, we're going to have global PMIs up. So this is very positive and constructive for gold, especially in the second half of this year.
Thanks so much, Frank. That's all the time we have today. And thanks for watching this edition of Gold Game Film. We'll see you tomorrow.